Hello and welcome to another episode of Property Ponderings, the podcast where we dig deep into property buying and renovating to help you turn your real estate dreams into reality. I'm Craig Nicol from Nicol Buyer Advisory in Melbourne, Australia, and today we are going to take a closer look at the Melbourne property market's current state and outlook. With a detailed mix of recent data and expert insights, we'll cover off why the market is both challenging and full of opportunity right now. By the end of the episode, you'll know what's driving Melbourne's property market trends and where the best investment spots may be in the coming months. Let's dive in. So Melbourne's recent market performance. The property market has been slower than other capitals over the past couple of years. CoreLogic reports a slight decline in Melbourne's dwelling values recently, showing a 0.2% drop over the last month and a 1.9% drop over the past year in Melbourne. While other capitals like Sydney and Brisbane have seen significant growth, Melbourne's values have remained flat, currently about 4.4% below their March 2022 peak. Interestingly, despite this underperformance, Melbourne continues to see strong auction activity, with 1,293 auctions held last week alone. This was the third highest auction volume in the city's spring season, with a 66.5% preliminary clearance rate, signalling resilient buyer interest in certain segments. So let's talk a little bit about the economic and policy challenges in Melbourne. Melbourne's economic backdrop has faced serious challenges that have impacted the property market. Victoria saw a net decline in business numbers and has a high tax burden, with increased payroll taxes impacting larger businesses. Combined with extended lockdowns, this environment has hampered local economic growth, which directly affects property demand. Further discouraging some property investors are Victoria's stricter tenancy regulations, Airbnb taxes and higher land taxes, which have made Melbourne a less appealing investment compared to other states. However, these factors may have created a window of opportunity, especially for those considering long-term investments, as Melbourne's market potentially stabilises and recovers. So let's talk about this long-term growth potential. Despite the recent slowdown, Melbourne's long-term fundamentals remain strong, supported by population growth and infrastructure investment. Victoria has recorded Australia's largest annual population increase with over 183,000 new residents, largely driven by overseas migration. For the first time since the pandemic, Victoria is almost drawing people from other states, intensifying demand for housing. At the same time, Melbourne's supply is tight, the number of dwellings under construction has fallen, and the state is on track for its lowest level of new housing completions in a decade, which could lead to a more demand-driven price pressure. Melbourne's affordability compared to Sydney has become a noteworthy trend. A typical Melbourne house now costs around 41% less than a comparable house in Sydney, marking the widest gap in 20 years. This difference could be a key opportunity for buyers, especially considering Melbourne's historical trend of closing the gap with other capitals over time. And anecdotally, I have seen this with more clients inquiring from interstate that are looking to buy into Melbourne, especially those coming from Sydney to invest. For buyers seeking value, Melbourne's more affordable properties, particularly in outer suburbs, have been outperforming. These areas have offered a more accessible entry point and have been popular among first-home buyers and investors alike. So as everyone would have seen, there has been a tightening rental market and rising rents due to a number of factors. Melbourne's rental market is under pressure, with vacancy rates at historic lows of 1.5%, well below the 2 to 2.5% benchmark for a balanced rental market. The combination of strong population growth and constrained housing supply has led to soaring rents, which grew by more than 9% over the past year. For investors, this environment may offer solid rental returns, particularly for well-located properties in high-demand areas. Now, the Victorian government has had a push for housing supply. So to address Melbourne's housing shortage, the Victorian government has recently introduced two key measures aimed at stimulating development. Firstly, a 12-month reduction in stamp duty is available for off-the-plan units, townhouses and apartments. And then secondly, 50 new activity centres have been earmarked to streamline planning for multi-storey residential developments. While these policies are intended to improve supply, the immediate effects may be limited as new constructions take time to bring relief to the market. So where are the best opportunities in Melbourne? So given all of these dynamics, where should buyers and investors focus their attention? Here are areas to consider. Family-friendly homes in gentrifying suburbs. Established houses with 3 or 4 bedrooms in middle ring suburbs continue to attract families seeking space and access to good schools. These areas that are experiencing gentrification are becoming more and more updated. There's nicer and nicer homes in these areas, so the prices are going up higher and higher. So there's some good opportunities there at the moment. The other consideration is townhouses in middle ring suburbs. As affordability challenges grow, townhouses offer a balanced option between a standalone house and apartments, which can appeal to first home buyers, young professionals, as well as downsizers into the future. And this is really convenient, especially in the inner and middle ring suburbs, and they don't have that high price tag of a detached house. The other consideration is smaller houses. So they're on their own title on a smaller block. If you can find them, they're a bit more rare, but there's good opportunities there at the moment if you can find them, especially if they're un-renovated, to be able to put some work in them, add some value. And these sorts of properties also appeal to downsizers, young families, young couples, and so they really should be on the list for any investors out there as well. And the final one for people to consider is new home blocks, or blocks you can develop onto with a new home, or blocks you can develop multiple units on, or renovation properties. And I'm putting those all in one category because the last few years we have all seen that renovation costs, building costs have all skyrocketed due to a number of factors, including material cost rises. So those sorts of properties, we are still seeing great opportunities for people to buy in because they are selling, I believe, under what they should be at the moment. There is a bit of an overcorrection. A lot of people are scared of buying these sorts of properties, but I think if there is any turn in the market, they present a wonderful opportunity to add value and build equity really quickly. The other thing to look for are small unit blocks with boutique developments of say 8 to 15 properties. So those could be apartments or villa units, and there's some really good opportunities there. A lot of investors have been selling, so those sorts of properties that have been held for 10, 20 years and performed really well are being offloaded, and that presents an opportunity for first home buyers, downsizers or investors to jump on those properties because they are normally well located. They do have more generous spaces or less complexity with a smaller body corporate, and normally a higher content of land value, which has historically meant higher growth into the future. Looking ahead, Melbourne's market is expected to pick up momentum, with several forecasts predicting strong property price growth over the next 3 years. If you've listened to much of my content, I have been quite bullish on the Melbourne market to turn at some stage over the next sort of 6, 12, 18 months. We don't know exactly when it will happen. A lot of people are tipping with the anticipated interest rate drops that many are forecasting that may instigate the change. That may well be the case, or it could be a little bit later if there's any change of government, things like that could really trigger quite an increase in interest and demand, and also spike property prices. So I'll be holding out for that. Oxford Economics came out with a property price prediction for Melbourne and anticipates a 21% increase in Melbourne house prices and a 20% increase for units in the next 2.5 years to mid-2027 mark. Aligning with Melbourne's long-term trend of steady growth. Strategic investors who buy into Melbourne now may benefit from this rebound as the city's property market works to catch up, you could say, with other capital cities and revert to historical growth rates. If you've seen the data I've posted on social media before, in the data released by CoreLogic when they did a 30-year look back at property growth rates across Australia, Melbourne was the strongest performer across all capital cities. So that's what we mean by reverting back to historical growth rates, as Melbourne has historically been a really strong performer. So to sum up, Melbourne's property market may be slower than other capital cities, but its strong fundamentals like robust population growth and high livability set it up for future gains. While challenges remain, particularly in terms of supply and economic policy, these may actually create timely entry points for savvy buyers. If you're considering investing, now might be the perfect time to act, particularly as the Melbourne market is positioned for a potential upswing. So that's a wrap for today's episode of Property Ponderings. I hope this has given you some useful insights into the Melbourne property landscape and ideas on where the best opportunities may lie. If you have questions or would like tailored advice on buying or investing in Melbourne, reach out to me at 0400 122 081 or craig@nickelbaradvisory.com.au. And as always, let us know what topics you'd like covered in future episodes, and we'll do our best to cover those. Until next time, happy property pondering. Provided in this podcast for general information purposes only and does not constitute financial, legal or professional advice. While we aim to provide accurate and up-to-date information, every property transaction and investment is unique and should seek the advice of a qualified professional before making any financial decisions. The opinions expressed in this podcast are our own and are not a substitute for tailored advice from a financial advisor or a real estate professional. We encourage you to consult with a qualified expert who can address your specific needs and circumstances.